Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned and things that have helped me build up a sizable portfolio in about 2 years and now manage that portfolio. Today, y'all, I want to talk about the benefits of owning real estate. My gosh, Cameron, we probably heard about this. This is several hundred episodes in, but I think it's important. I used to always be focused, and I think you probably are too if you're watching this, cash flow. I want to leave my job, I need some extra income, cash flow, cash flow, cash flow. That, my friends, is the smallest or one of the smallest benefits, or just a small little sliver of all the benefits of owning rental properties, especially residential real estate. So I put these down. Before I get into that and share all those with you, if you guys find this stuff valuable, like, subscribe, share it with somebody, only if you find it valuable. If you don't, give us some feedback below. Always appreciate constructive criticism and feedback. So y'all, let's get into this. Benefits of owning real estate. These are in no particular order, but obviously I put cash flow at the top because cash flow is always on top of people's minds. Guys, I was all about cash flow when I first started. And I would say most folks I talk to do that because they're trying to get out of a job, or maybe they're trying to supplement income. A spouse, they don't want their spouse to have to work, or they don't need that. They just need something, while their kid is in daycare to cover those costs, whatever it might be. Cash flow is probably the most frequent reason for buying into real estate. However, I can tell you guys from my personal portfolio, and if you guys ever want me to do like a super deep dive in like percentages and how this stuff kind of overall contributes to the benefit of your portfolio, make a comment below and I'll put this video or a video like that in the queue. But cash flow for my portfolio has been one of the smallest wealth creators. It is not, contrary to popular belief, it is not the top of the list. And the reason for that being, if you buy a $200,000 house and it goes up 5%, that's $10,000. That's like what, $700 or $800 a month you have to make on that on cash flow to make that. So that's why cash flow, if you make a couple $100 a month in cash flow, you're usually doing pretty good. And that one, the one I'm talking about that dwarfs that, is appreciation. So again, you got a $200,000 house, it goes up 5%, that's 10 grand. Now next year, your house is at 210,000. And if it goes up 10 or 5%, it's not going up on the original 5% of your 200 grand, it's going up on 5% of your 210,000. Also, let's just say you had to put a $10,000 down payment. So you have a $200,000 piece of property, you're gonna buy it, you put $10,000 down. If that property then goes up 5%, i.e. $10,000, you have made 100% on your money, because it's not going up 5% of the money you put in, it's going up 5% of the total value of that property, which is $200,000. It doesn't matter what you paid for that. It does not matter what you had to put down. The value when you bought it, if it goes up, if the market, rising tide lifts all ships, if the market is up 5%, your house is gonna go up generally right around there. The average has been closer to that 5%. It's like almost 4-ish for the past 20 years. Now, obviously 09 killed everything and then everybody things been coming back, but Houston's been on a pretty good tear. I always use 2%, just FYI, if you guys are doing any calcs, I always do estimate appreciation at 2%. Cash flow appreciation, those are probably the most common. Then the next one is taxes or depreciation. I'm sure you guys have heard it. I have a video where I break down depreciation, accelerated depreciation, all that fancy dancy mambo jumbo, whatever that is. There's a lot there in depreciation and write-offs. It is fantastic, but I would never want to spend $100 to save 15. And I see that happen a lot in real estate and a lot as business owners. I'm sure you guys have seen that Seinfeld episode about write-offs. It's a write-off, write it off, write it off. Or maybe that's Schitt's Creek. Schitt's Creek, I think it is. It's a write-off, just write it off. All you have to do is write it off. If you guys don't know what I'm talking about, check it out.
You don't even know what a write-off is.
But yeah, you gotta understand taxes and depreciation. It is a piece of that and can create kind of fake losses. Again, I go into that in another video, but it is a benefit and it does give you a little bit of tax savings up front, as well as passive losses. You're allowed to offset some of your active income only up to a certain amount. Leverage. Real estate, especially residential real estate, and especially if you house hack, you can get incredibly cheap financing. And you guys might be saying, cheap, Cam, what the hell? It's at the time of this recording in 2024, interest rates are 6 to 8%. That's not cheap. But I guarantee you, going and buying an owner occupant property or going and putting 20% down on a piece of real estate, you're going to get cheaper financing than if you went and tried to buy a business or go leverage your stocks. Usually that debt is a lot higher. Hell, look at some car loans are 20%. So this is leverage, the ability to leverage real estate at some of the cheapest financing you get is super beneficial. And I'll try not to butcher this, but basically if you have a property leveraged 50% and the property goes up, like we were talking about 5% a year, and you leverage 50%, you actually get a 2-to-1 benefit. So you're not going up 5%, it's really your return is going up 10% because you're leveraged. You've only put down 50% of that. You guys can do the math on it. I promise it works out that way. Leverage allows your returns to increase. You obviously have the risk if you don't make the mortgage payment, and I've got the other video up here on how variable rate debt can put you in a precarious situation. But leverage can be great, it can be your friend, but it can also put you in the not happy place, bankruptcy, all other sorts of Dave Ramsey stuff. Value add. This is something that is so fantastic, especially right now, where if you guys are having trouble finding deals, you can take your property, blow out the kitchen, spend $15,000 to $20,000, put new floors in, add a bedroom, add an ADU, wherever you're at. There's so many ways that you can add value to a property. You can't do that with a stock. You cannot value add a stock. You buy it, hopefully Steve Jobs, well, he's dead, Tim Cook or whoever it is, Warren Buffett, hopefully those guys are doing their job and increasing the value of your stock, but nothing that you can do or are going to do is going to drive the value of that stock up. Stock doesn't care that you own it. Real estate doesn't care that you own it. However, unlike the stock, you have the ability to go in and improve and drive the value of your property up. Some of y'all, if you buy turnkey, you might not have any other options. You might have used up all your value add, which is fine. But if you buy a distressed property or one with old carpet, old appliances, and you buy it knowing you're going to do a value add, and wait till that tenant moves out, they've been there 3 or 4 years, wait till they move out 4, 5, 6 years down the road, then do your value add. Now you've increased the value 5, 10, 20, 30, 40, $50,000. That's a huge benefit that you do not get in other asset classes. You can do this with businesses as well, but any stocks, gold, bonds, nothing you can do like that. That actually, I'm going to go down here just because that kind of parallels off that. So that says basically buying at a discount. Sorry about all my chicken scratches, y'all. If you buy at a discount. So let's just say, and I did this with a lot of my properties when I was starting out, I had a $100,000 property that I would buy at 80 grand. I just made $20,000 like that. If you buy an asset, it's just like buying something at a discount. You buy, it's worth $100 or $100,000 or $1 million. You buy it at 5, 10, 15, 20% below market. You have immediately made that equity. You have immediately increased your net worth. So that's something that you might not see as much now because obviously prices have been going through the roof, but this will come back. You'll be able to buy at a discount. You find somebody that's distressed, neighbor, wholesaler brings you a property, whatever. But this is a huge benefit that buying at a discount is not offered in a lot of other asset classes. Let's go back up to the top. Control. So kind of like a value add. You can control not all the time, right? You don't know when the AC is going to blow up or the roof, you're going to have a hurricane, the roof's going to get torn apart, you're going to have to spend money there. However, let's just say you get a big bonus from work. And this is kind of, at a time in the year where you don't need the money. You can go and again, do a value add to your property. Go put some new siding on, go fix up the roof, go install a new AC system, go redo the hot water tank, do whatever you want. You can do a value add play, but that gives you the control of that property to be able to kind of control some of the expenses. And then there's ways, again, with the tax code on how you can write that off or depreciate that. Gives you a little more control than just, I have this much loss from a stock or I have this much loss from, a business sale or whatever. This control aspect can increase your returns as well. Let's say there's a year you're getting about a big bonus, you can do a lot of expenses on the property. Stable. So stock market trades 5 days a week, say for holidays from 9 to 5, right? Or 9 to 4. The real estate is nobody is out there pricing your property on a daily basis. Said, hey, Joe, your property today is worth $100,000. and then in 5 minutes telling you it's worth 101,000 or 99,000, and then 105, and 106, 108, 110. Oh, nope, today it's worth 92. You're not getting that. So you have a lot more stable action in real estate. You don't see the huge price fluctuations like you do in the stock market or in various other investments like crypto and gold. You even see gold prices, currency go way up and way down very quickly. I will say you have seen real estate prices go up dramatically over the past 5 years, but obviously that was an anomaly. The double-digit asset appreciation was driven by super low interest rates and some other supply chain issues. That is not normal. That is not something that happens a lot. You're going to get your 2 to 5% increase every year, very stable, slow and steady, but that's more like more normal, the stability of it, which is nice because if you guys most of y'all have a job, right? You work some sort of day job, whether it's a white collar or blue collar. We have both owners on both sides of that. When you do that, you are probably contributing to a 401k, you're probably contributing to an HSA, you're probably doing this other stuff, and your value can change dramatically. Whereas real estate's nice and stable. It's relatively stable. At least the value of it is. Obviously, rent can come in and come out with expenses, but relatively the price or value of your property is not going to change day to day or week to week. And the last one's diversification. Again, you guys can buy stocks, bonds, real estate, crypto. Some people are saying crypto's an asset class, alternative investments like buying into businesses. But this is one that can diversify. You guys can diversify your portfolio. If you have some of it, like I said, in a 401k, you're doing a Roth IRA, traditional IRAs, HSAs, this isn't something that's separate from that. So if the market's really down, it doesn't really affect whether your rent's coming in or not. So diversification is a nice tool, and real estate, residential real estate is a great way to diversify. So I'm not going to read back through all those, but those are the main ones. I think that's 9. But my Athens, Ohio education, you guys might have to spot check me on that. I hope that was helpful. I love real estate, great benefits. There are some downsides as well. Done a video up here on the downsides, why owning rental properties sucks. There are downsides. These are the benefits. You have to weigh for yourself whether the benefits outweigh the risks and make that decision for you and your family. I am here to help shed light on all those and put everything in front of you and for you to make that decision, or at least hopefully be a little guide for you. Okay, y'all, thanks for tuning in, sticking in this far. I appreciate y'all, and I'll see you next week.